This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. Glad you're here on today. I am Cesar Delgado. I am your host of today's program. I am joining with Mike Miner for today's edition of Back Roads of Illinois. We were bringing you elastic for farming sources and information sponsored by AgriGold. We're glad you're here on a Monday afternoon. We were talking about the ethanol industry and the RVO with Chris Dilley from Growth Energy. Chris is Vice President of Regularity Affiliate with Growth Energy, and we are talking with Tyler Schauf from agmarkets.net. This has been Back Roads of Illinois. This is your commodities markets update for this afternoon. August corn is up at 5 to 10 cents. September corn is down at 3 to 8 cents. August beans are down at 4 to 6 cents. November beans are down at 3 to 5 cents KC. September wheat is down at 9 to 5 cents. July KC wheat is down at 5 to 10 cents. Chicago September wheat is down at 3 to 6. March Chicago wheat is down at 3 to 6 cents. Livestock markets are lower for today as well. August cattle is down at 5 to 4 cents. September cattle is down at 8 to 6 cents. October feeder cattle is down at 3 to 5 cents. December cattle is down at 8 to 6 cents. August hogs is down at 8 to 5 cents. October hog is down at 3 to 5 cents. This has been your commodities markets update for this afternoon on Back Roads of Illinois. The RVO is involved in the biofuels blend in the country, but it was grant from the EPA with SAF. We were talking about that with Chris Dilley from Growth Energy. Chris is a Senior Vice President of Regularity Affiliate with Growth Energy. Chris, how are you, and welcome to the show.
Great to be with you, Caesar, and looking forward to the discussion. Thanks for having me on.
Chris, let's discuss about the RVO situation, which is the top topic for today. Can you explain to our audience that what's impact on the corn farmers?
Sure. So the EPA has proposed a rule for the renewable volume obligations for 2026 and for 2027. We're very pleased because these are the largest renewable fuel volumes ever proposed by the EPA. And so for ethanol, that means 15 billion gallons of conventional biofuels for both 26 and for 27. And so for farmers, this gives, once this rule is finalized, which we expect later this year, that provides certainty. That gives our ethanol producers certainty about what the market is going to look like for the next 2 years. And that provides certainty to the farmers as well as they provide inputs to the ethanol producers over the next 2 years.
What is the main concern about it for this mandate, Chris?
I think the main concern and something to watch out for are refinery exemptions. So these, as mentioned, these volumes are very good. It's a great proposal from the Trump administration and the EPA. But there are provisions that allow small refineries to exempt themselves from the volumes. And we've seen abuse of these small refinery exemptions in years past. And if there are these refinery exemptions are abused and not accounted for properly, that can impact the volumes. And so essentially the volumes are hollowed out. I mean, this could impact billions of gallons of biofuel. And so that has an impact to the biofuel producer as well as the farmers who provide, corn and sorghum to the ethanol plants.
We will see, Chris.
Yes, again, we hope to get these finalized. The administrator of EPA has said by October 31st. And so we want to get these finalized, but we're keeping an eye out on those refinery exemptions. It's a shark in the water, as I've termed it.
We know that you're the Senior Vice President of Regularity Affiliate with Growth Energy. I am just curious, what is your thoughts on the import of sugar cane ethanol from Brazil?
Yeah, I think for us, we've had concerns about that, mainly because Brazil has a tariff on US ethanol, US corn ethanol going to Brazil, and we don't have the same tariff here in the US. And so, certainly the Trump administration has been very engaged on this fairness issue. I think one of the other concerns we have is that Brazilian sugarcane ethanol is able to get an advanced biofuel RIN where cornstarch ethanol is not. And so that's an issue that we've been working on as well. But we're pleased to see that our trade representative and others in the administration are starting to address this fairness issue. And hopefully, we can return to parity between the two markets.
What about the electronic vehicles in the future, like in 2030?
Yeah, it's a great question. And of course, the more uh, electric vehicles that are on the road, the less potential demand. I will say there have been actions here in DC to, pause what the Biden administration had done as far as aggressive electric vehicle sales and requirements. So we'll see how that plays out. Um, But I think the other piece here too is that I think you're finding that with hybrid vehicles, those that continue to use gasoline, those can use potentially higher ethanol blends and get similar, if not more, carbon reductions than even an electric vehicle when compared on a wells to wheels basis. So again, we need to do more to grow higher ethanol blends such as E15, and continue to show regulators and others that using a higher ethanol blend, even with a gasoline engine, can actually bring more emissions benefits than just a pure electric vehicle. So I think that's an important discussion, and particularly on the hybrid side, and going forward. Plus, you also need a solution for the, millions of vehicles on the road today that still use liquid fuels. And so, we believe E15 and higher ethanol blends can be that solution.
Do you have any final thoughts on this RVO?
Well, again, I think it's a fantastic proposal. We're really pleased with the volumes. We're really pleased with what EPA has done here. I think for us at this point, it's trying to get it finalized in a timely manner. So meeting that October 31st deadline. And again, vigilant about the abuse of small refinery exemptions. We think that should really be a last case scenario. Maybe there are a couple of these, and even if they are granted, they should be accounted for so there's not lost biofuel volume and not lost ag demand. So a lot of work between now and the end of October. We're going to work on our comments. The EPA just had a hearing on that as well. And we're going to continue to work for EPA to get these finalized and basically uphold those volumes as true volumes. So Looking forward to the work ahead and looking forward to the certainty it provides for our ethanol producers and for ag as a whole.
Where people can find you for your information on the biofuel industry.
You can reach us at growthenergy.org. We have a lot of good information on our website, and certainly come visit us here in Washington, D.C.
Thanks, Chris. I enjoyed our conversation.
Thanks, Caesar. Enjoyed it as well, and glad to be able to join you this morning.
I'm here with Chris Billy from Growth Energy on back roads of Illinois. After the RVO in the Midwest for the last couple weeks with the fundamentals markets, we were talking about that with Kengan Leyden from agmarkets.net. Great to have you again. Hope you had a good summer.
Yeah, it's my first time with you, Caesar, so it's nice to make your acquaintance. I know I'm filling in for Tyler today, who is traveling.
Good to have you. All right, you know that I've been out since June. However, could you tell us about the RVO introducing in the EPA?
Yeah, so I think there's two main things that the market has maybe priced in by now. Some of it could change, but the first was that renewable volume obligation, which is part of a government policy administered by the EPA. And basically, the amount of biofuels that are mandated by people who sell different types of fuels, that number went up. Um, it's still in a comment period, so it's not official law yet, but the proposal in the bill, which I think has a comment period until early August here, um, has that number going up. So that is more demand for oils in general. So if we're talking Midwest, that's why we've seen some of the spiking in the soybean oil price over the last few weeks. It drug soybeans up there for some of that rally we saw late last month, which the market hasn't been able to hold due to probably due to the number of soybeans and the great weather we've been having. And the other thing was the 45Z, which is a little bit different, and it was a blender's tax credit if they're making biofuels, and that's based on those red numbers, and that was extended through 2029. So there's finally some guidance on there. Not necessarily more demand, but a program that had been in place, which will continue to be in place and likely help, you know, um, keep blenders profitable and crushing beans.
Thinking. What is your position on this biofuel demand in the markets, especially in the corn markets for ethanol?
Yeah, so the blend mandate for ethanol did not change. So um, it's probably not so much a story that RVO, so and the RIN number, the amount of ethanol which is mandated to be blended for gasoline didn't change, but some of that more biofuel stuff is what changed, and there'll be more biodiesel blends, which are mainly coming from your oil crops. I know corn oil is something that's used in there, a byproduct of the ethanol. And soy oil will be really important for those in those plants. So I think it's a more of a bill that lended some support to the soybean oil market and then the soybean market for a short time until some of these fundamentals with weather and the large Brazil crop um, weighed the market right back down to about that $10 level we closed a little bit above today.
Of course, we will see for next couple weeks.
Yeah, next couple of
What
weeks.
is your position?
Uh,
Go ahead.
yeah, so I think what we'll see for the next couple of weeks is all going to be based on weather here. Everything's been very good so far. Conditions are good. You know, that crop rating is supposed to come out at 74% tonight, which is what it was at last week in corn, which isn't necessarily is very high compared to previous years. So a lot of corn in the United States, soybeans are in very good condition. And so very good condition with some forecasted rains. And unless those rains dry up, I think the market may continue to be pressured. There is also some tariff news, that there's some new deadlines in August for some of the tariff information. Trump has been releasing a few things on um, potential tariffs. So the market will probably be watching tariffs, but the main thing is going to be weather. That's the thing that everyone probably needs to watch. And if this market is going to catch a rally, it's going to have to be because it really dries off here in August. And but there's a lot of, you know, uh, a good weather and a good crop out there right now, which is one of the reasons the markets have been under such pressure.
What is your position on the fundamentals on the grains market, especially with the lower prices for the corn markets?
Yeah, so again, if you're looking, that WASI report came out and they lowered some of that carry out and stocks to use, but um, they haven't done any adjustments for yield yet. So they're still using trendline yield as of the July was the August was news where you could maybe see some adjustments in that. So the market probably thinks the yield is bigger than that 181. You hear a lot of private analysts coming out with these large numbers. And so if the weather stays good, I think the fundamentals there more, it goes back to the supply and demand. And if we're getting higher yields and the weather stays good, I think the fundamentals with that large supply are going to continue to, place pressure on this market. Could be similar to last year's market where we reach a point and prop maybe is still really good, but it's not getting better after a certain point, and then we'll have to look at what demand is doing there. There's been a lot of demand this past year. If that demand continues to be, stimulated and not stifled through tariffs, I think there's a fundamental story where you could see some price action upward, but none. It just depends on factors. So it's not nothing I'm betting on yet, but it's something.
What is the technical aspects on the feeder cattle for today's market?
Yeah, so feeder cattle have been crazy, right? Through June they had like that $10 to $16 break, and then they gained it all back within a few trading sessions here in early July. They made new highs last week. That market was pushing new highs, and then today, I don't think we traded higher because we didn't trade any higher, so it's not technically a reversal. Um, but we had a big down day, and I think on the weekly chart, we haven't traded lower on the weekly chart if we're looking at technicals. Last week had a big weekly bar, but um, it was a bigger down day today in cattle, and it's sometimes we get these $5 swings. I didn't see any major news story to accompany it. Talking more fundamentals, we did have the superior sale last week, and most of those cattle aren't reportable to the feeder cattle index. So you saw a drop in the feeder cattle index today. So that's more a fundamental cash number those contracts settle against. And if you look at that August month, which settles against that feeder cattle index, feeder cattle index was down $3.48 today, is what I'm showing. 319.89, and that August contract closed at 319.47. So basically it's sold off to where the feeder cattle index was going to settle. And so that's more fundamental. As far as technically, the bull trends uptrend today is still intact. You know, this $5, $6 sell off today doesn't necessarily damage that. But every time we get those in a cattle market with managed money being as long as they are, it is something scary. So, looking at some ways to protect cattle at all-time high prices, with hedges or something is always something to consider.
How is the cash cattle side from last week? We're into the new week.
Yeah, so usually bids are a little light here in the week. I think the last I heard, I think box beef kind of was down lower on Friday. I haven't seen any numbers today on the box beef. I didn't get to look at that yet, but cash is still fairly strong. As far as live cattle and kills. So you know, Southern cash, 230 to 240. If it doesn't hold there, I haven't heard any trade today. But if we're holding at 230 to 240, there's still a big difference between what cash is trading for and that board price and those live cattle.
Do you have any final thoughts on the RVO?
Yeah, the renewable volume obligation, it's good. I think a program like that is important for soybean farmers or canola farmers up in my area, just because so many beans are being grown, in Brazil now that without more demand from something like a renewable volume obligation, you know, you're going to have to compete with low price Brazil beans on an open market for export. So, something like ethanol or something like the RVO, which increases domestic use, I think is a very important story moving forward. And, if that number increases in the future, with 45Z going through too, and this RVO, those incentivize crush plants to be finished, which improves local demand for beans, improves local bases. So I think it's an important development, and hopefully something that's maintained through future administrations and future congressional sessions.
Thanks, Kegan. This is Kingdom Leyden for Tyler Schauf from agmarkets.net on back roads of Illinois. I am Cesar Delgado. You have a great day.